What is going on, investors? Hopefully, you guys had a great week out there. It was a busy week from a FAANG stock perspective, and we are here on the FAANG Stock Recap Show every Friday to break down all the news that has happened with all the major FAANG stocks, including Microsoft and Tesla. All these companies outside of Netflix reported earnings this week. And we're not going to waste any more of your time. We're going to jump right into things. We kick things off like we always do with Facebook. Started the week at $372. And like a couple of these stocks, fell off a cliff. This thing ended the week at about $356 per share. When we get to the technical section of the show, talk about, is Facebook broken trend? Should we be concerned about it, or should we be looking to buy the dip if it has broken trend on us? Now, starting with the news with Facebook, it dipped 4%. This is referring to earnings as investors look to weigh Apple's effects on the coming slowdown. So we saw this actually on the Google call, which we'll talk about here in a second, and we saw it on the Facebook call as well. Both management teams didn't give any specifics about the last two quarters of the year, Q3 and Q4, but they basically said, hey, we're coming up again. Last year was a tough comp. There was some stay-at-home stuff that benefited us. We don't necessarily think that's going to be there. We think we're going to slow a little bit. But they didn't give like really specific guidance on that. Didn't give like really hard targets that they're shooting for. And so we'll see what happens in the coming quarters with Facebook. Is this just a big old sandbag? They're probably still weighing these Apple effects. And if you're not really sure of that, when you download an app, you might have been prompted or notified on there. Do you allow the app to track you, or don't allow it to track you? In the past, when you downloaded an app, they were able to see like your web history. They were able to see some of the other apps that you might have downloaded. Now they can't do that if you allow the app not to track. And so this obviously affects businesses like Facebook that are trying to show you targeted ads. And I think the companies are still trying to work through this. And to be honest with you, as somebody that is in the ad business, been in the ad business for 10 or 15 years, everybody in the ad business is still working through it as well. So we're not exactly sure the effects of this Apple. I'm sure advertisers will work to some kind of workaround at some point, but in the meantime, it is crimping the ad business to a certain degree. And I think Facebook and Google kind of hedging their bets there a little bit. Now, on the earnings call, this was interesting. This is after we posted video. We posted videos on all these stocks this week, so check out the channel if you missed those. We go in depth on the financials. On the Friday show, we're going to skip the financials because I just did 15-20 minute videos on each of these companies. But if you are interested in the financials of these earnings, having us walk through those, obviously check out the channel videos somewhere on the channel page and you will see those. Now, what I thought was interesting was the Facebook conference call where Facebook's Mark Zuckerberg, who I always enjoy hearing from him. I don't always agree with everything he does or everything he says or everything that he supports or doesn't support, but I thought this was interesting. So he says the metaverse, which is referring to what he believes is what's next for Facebook. And we're not talking about next quarter or potentially even next year, but he's thinking maybe 3 or 4 or 5 years down the line. And I like CEOs that think that way. So he's thinking the metaverse is a virtual environment where you can be present with people in digital spaces. You can kind of think of this as an embodied internet that you're inside of, rather than just looking at. Beep, boop, beep, boop. We believe this is going to be the successor of the mobile internet. The defining quality of the metaverse is presence, creation, avatars, and digital objects. In addition to being the next generation of the internet, the metaverse is also going to be the next chapter for us as a company. End of quote from Mark Zuckerberg. So here's how I see this. Right now, you guys are watching this video on YouTube and you're watching it on a linear screen, some kind of, iPhone or maybe your computer or whatever it might be. Well, what I can think of is maybe in the future, instead of watching this video by yourself, commenting it by yourself, well, now, especially when we just post these videos, hundreds, maybe even 1,000 people are watching the video at the same time. You all can be virtually in the same room watching this video. And not that the Friday FAANG Stock Recap Show is the best example of this, but think about things like the Super Bowl or a bowl game or a basketball game or a baseball game or something like that, or a concert. Then this type of thing could make a lot more sense. And we could be talking about multitudes of revenue opportunities for companies like Facebook. When you're talking about digital goods and digital things, digital transactions, you get more people together, more of that happens. So I was actually really excited to see that type of thought coming from Mark Zuckerberg. Now, the FTC chair, this applies to all of the FAANG stocks. That's why I put this story right up front here. The FTC chair, which was just confirmed, I believe, is Alina Khan. I think this is this young lady here, and she is going to stop big tech from supercharging fraud and warns of a merger boom. And so I thought some of her quotes were interesting in that online fraud is tolerated and even promoted by some of the world's largest companies, and that their singular focus is on scale and engagement. So she's basically accusing companies like maybe potentially Facebook and Google and maybe others that online fraud is allowed because they singular focus on scale and engagement. We'll see how she's able to do that. They say there are finely tuned instruments for bad actors. So that is what's going on Facebook these days, and maybe even YouTube right now. So we'll see if anything evolves from this. Again, the FTC chair can say these types of things. It requires typically the act of Congress to actually pass laws that enforce these types of things. Now, in terms of mergers and acquisitions, she's talking about that they are at the highest level in decades, straining the FTC resources. So what that shows me is maybe there's a breakdown in how we handle these mergers and acquisitions. Maybe they shouldn't go to the FTC if you don't have enough resources, or maybe we should hire some more resources. I don't know, but we'll see what happens in the future. This person here, Alina Khan, is not a fan of big tech, and it'll be interesting to see how the Biden administration uses that weapon to potentially get what they want out of Facebook and Google, which ultimately is probably money and power. And so if he's able to leverage her to scare them into allowing more access for him, could work out very well. We'll see what happens there. Now, Facebook explores tying Oculus workouts to Apple Health app. So on your Apple iPhone, you got a health app. You can link the number of steps you take. You can link scales and things like that. The Oculus, it looks like their first move into something like this is, we heard Mark Zuckerberg talk about this a few weeks ago. Really exercising, boxing tutorials, gymnastics, whatever you want to do. You throw on the Oculus and all of a sudden you can have a workout and those types of things. It looks like that's the first step to really, I don't want to say mainstream Oculus, but I think the point of buying an Oculus is mainly for gaming at the current time, but obviously Facebook wants to expand that maybe into fitness at the current time. Now, moving on to Apple, they also reported earnings at the beginning of the week. Company started at 148, really flat, okay? Thing is about like Apple in particular, and I would say Tesla as well. The companies are so well defined because, for one, Tesla reports the number of car sales on a monthly basis, and Apple's supply chain is so well monitored that we kind of have an idea on what their results are going to be. And so when the earnings come across, we don't necessarily see big movements like we saw with Facebook, like we saw with Amazon, which we'll talk about in a second. Speaking of Apple's numbers, they beat by 29 cents, but across the board, okay, iPhone came in at 39.5. It was expected to be 34.5. This is revenues, and it's in billions of dollars. Mac came at 8.24. We were expecting about 8. iPad came in at 7.37. We were expecting 7.13. Wearables came in at 8.8. They were expecting 7.6, and services came in at 7. We'll call that 17.5. The street was expecting 16.3, so it was like across the board, Apple just absolutely blew it out of the park. Now, Apple returned to the bond market for the first time the fourth time, not the first time, the fourth time in 14 months. So Apple, if you watched our video, they borrowed lots of money. I think they have well over $100 billion worth of debt. They get it for real cheap. I want to show you this. Apple just borrowed a 40-year security, so a 40-year loan that could yield 1.15 percentage basis points over treasuries. I'm not sure if it's the 10-year treasury, 30-year treasury, 2-year treasury, whatever it is. Either way, If anybody wants to loan me money at this percentage, I tell you what, I'd be super excited about this. And this is what has me, I'll try not to go on a long tangent here, but we just talked about Lena Khan, and she's talking about bad actors using Facebook. Look, bad actors are everywhere. Bad actors are using everything. They have no regard for the law. What I have a problem with is big, giant, rich corporations like Apple can borrow money easily, 40 years at 1.15%. But if me, the small business owner, wants to go borrow $10, $15, $20,000, I'd borrow it 4 or 5 times this rate. You know how hard it is to get a bank loan for that? I mean, you basically are broken over the lender's back. If you want to borrow at credit card interest rates, sure, they'll give you the money, but borrow anywhere like Apple does. I think that is one of the main problems in society today, is that big, rich corporations, yes, they have a lot of advantages, but their biggest advantage is they get to borrow money easily and cheaply, whereas smaller businesses, much, much harder. And so maybe I put my progressive hat on there for a second. We'll take that off and move right along. Apple stock moves lower with vague guidance. We saw this really across the board with FAANG. Pretty much vague guidance. We'll talk about Microsoft here in a second. They were a little bit harder on that guidance. Everybody else was kind of like, I don't know, we're not really sure what's going to go on. We've got tough comps in Q3, Q4, those types of things. All things being considered, it looks okay for Apple. I think they're just I think most of these companies are sandbagging a little bit. There are some uncertainties, especially when you're talking about chip makers, chips inside iPhones, those types of things. And obviously the resurgence of a virus or a variant of a virus, I certainly think has people concerned as well, and probably with good reason. Now, moving on to Amazon, start of the week at $3,664 per share. End of the week at 3,327. Big old cliff right here. We just skydived from about 3,600 all the way down to 3,338 on Amazon. We'll talk about that from a technical perspective in a minute. This is spoiler alert. This is probably the one stock that actually did break trend, and so we'll talk about that from a buy the dip kind of opportunity with Amazon. Now, their EPS came in, it beat by 280, but look, for the history of me following Amazon as a company, which is a long time, me being an investor in Amazon, which is over 5 years now, no one's ever given a crap about EPS. In fact, the lower the EPS has been, sometimes the better the stock performs. The Q3 outlook was disappointing. Take a look. In the most recent quarter, we had $113.1 billion. That is 27% year-over-year growth. And to me, that's a tough comp. Yes, you had Prime Day this quarter. I don't think we had that last year. Okay, just as an Amazon seller, I'm kind of privy to when Prime Day is, at least off the top of my mind, because it is something you actually have to prepare for. So I think Amazon delayed Prime Day last year, and they pushed it, I believe, maybe into Q3, and that's maybe why the year-over-year growth on Q3 is coming in at only 10 to 16% growth. And the consensus was for $118.72 billion. This is for revenue in Q3. So we just came off a revenue in Q2 of 113.1. That is 27.2% year-over-year growth. Amazon is now guiding for $106 to $112 billion of revenue. Again, that's lower than the revenue we just posted, and it is only 10 to 16% year-over-year growth. And the consensus was much higher than that. Good $6 billion more on that top end side than what Amazon has projected. So, couple things to think about. We did have Prime Day in Q2. I don't think we had that last year. That might have contributed to this massive year-over-year beat. The same thing, I believe Prime Day, again, this is just me speaking off the top of my head. I got 2 kids. I got, my memory's going as I'm getting older. But as I recall, we had Prime Day in Q3 last year, which might be representing why the comp is tougher. We're only growing by 10 to 16%. But it's really disappointing, a little bit disappointing, that we came in not only under consensus, but under where we are at on the revenue from last quarter. So quarter over quarter, we're dropping, and the growth rate is dropping year over year. Those things had investors spooked. Not only that, you have Jeff Bezos walking out the door, and so maybe some people are thinking, this dude just took his billions and sacked it on Andy Jassy to turn this ship around. We'll see what happens. Amazon is setting to look at accepting Bitcoin payments, By the end of the year, this was refuted by Amazon in a statement later. We'll see what happens. I don't know if it makes a lot of sense that they wouldn't take Bitcoin, but I can think of a lot of reasons why they wouldn't take Bitcoin, okay? From just a financial perspective, those types of things, kind of interesting. What I'd actually like to see Amazon get into is get into the game that Cash App, which is Square, PayPal, obviously Coinbase, and Robinhood are getting into. Be an exchange. Let me trade my Bitcoin, buy and sell Bitcoin and other cryptocurrencies through some kind of Amazon exchange. Cut the fees. Do what you do, like Amazon, like facilitate the transaction. I don't need to buy my kids Hot Wheels with Bitcoin, but I think it'd be kind of cool if I could buy and sell Bitcoin through Amazon, just like I do with PayPal, Square, Robinhood, those types of things as well. Moving on to Netflix. Now, they reported last week, during the week, really just kind of flat, 513, 517. We'll talk about it from a technical perspective as well. Thought this was interesting. Netflix wins again as fan surge fuels manifest binge. I don't watch a lot of TV, so I'm going to sound like an idiot when I talk about these types of things, but there's this show Manifest. I believe it was on NBC. It got canceled last month after 3 seasons, and streaming's right owner Netflix, so NBC had the rights, I think, to the show, at least from a broadcast perspective. Netflix had the rights to stream it, and they both opted not to pick it up. But look, last week you had $2 billion streaming minutes, not hours, not dollars, 2 billion streaming minutes streamed of this Manifest show. And last week you were at about 2.5 billion minutes streamed of this show. So fans are really juicing this thing up. I think it's just an interesting phenomenon that Netflix is allowed to kind of facilitate this. Okay, so you had a show on Netflix, or excuse me, you had a show, well, it was on Netflix, but you had a show on NBC. It got canceled. Fans get a little nostalgic or whatever it might be, and they rush to Netflix to kind of binge watch it. I think that's cool. It looks like that Netflix, but maybe even NBC, are looking to bring this show back, because when it tops the charts over, and this is actually the biggest total for a program since Bridgerton and Cobra Kai, which my wife watched. Excuse me, I don't watch a lot of TV, but I just thought that would be a fascinating look into that. Now, moving on to Google, we're quoting the GOOGL. They obviously have GOOG as a ticker as well. This company started the week at 2,668, and I'm going to cue the broken record that is sitting over here that has a big old Google sticker on it, because this stock just continued to go higher. Okay, after reporting earnings, I mean, the earnings were incredible at Google, especially like YouTube, and across the board, but YouTube growth was absolutely incredible. So you're welcome, Google. I've contributed a little bit to that as well. But we ended the week at about 2,700. I think, as you can imagine, when we get over the stock chart on this one, it's not going to take more than 10 minutes to analyze it, because this uptrend is intact and it is still going over at Google. Now, Alphabet shares, or Google shares, rise 4% as analysts see a boost in target after Smash Fest Q2. Now, the company set a number of records, including getting a lift from strong digital advertising to boost revenues 62% higher. Google's core search business, which is 25 years old, 20 some odd years old, grew 68%. Okay. And so I just did a video on Pinterest, and their revenues probably grew about 100%. But you're trading 22 times sales on Pinterest. You're trading like 9 times sales on Google, and they're growing just a little bit less than kind of the upstarts in this space. This is why I love these stocks. Facebook, we saw early in the week, grew, I believe off the top of my head, 56%. Google's growing 68%. Guys, this is why I don't know why people fool around with a lot of the little stocks. Maybe in a different market. Look, a year from now, 2 years from now, 3 years from now, might be in a different market. But when the behemoths are growing 68% and 56% respectively in the online advertising business, I have no idea why you would want to buy shares in any other company other than those two. At least from, if I had $1,000, $950 would be tied up in that. And maybe I sprinkle my last 50 on Pinterest, Snapchat, and Twitter, and maybe a couple other ones. Other than that, you run with the winners, in my opinion. Now, on the Alphabet call, rest of year may face more muted tailwinds. So this is what I was talking about. So with Facebook, they kind of said, oh, we're kind of nipping to Q3, Q4. We're not really sure how it's going to go. Same with Apple. They were a little vague too. They weren't really sure how it was going to go. So they say in services, the benefit to revenue growth in Q2 from lapping effects of COVID last year will diminish throughout the balance of the year as we begin to lap stronger performance in the second half of 2020. But they didn't give any exact. So they slipped this in, I think, just as a margin of safety, okay? If they come in a little bit light in Q3 and Q4, Facebook and Google can point back and say, well, look, we told you in Q2 we were coming up against tough comps. But if they don't, it'll be like, oh, we blew it out of the park. So I really think that's just what this is. This is just, kind of analyst speak, just kind of giving people a little taste of what they want. And my guess is Google and Facebook, I see no reason why they won't come in on the upside of their targets that they've been setting. Moving on to Microsoft, started the week at $287, slid sideways, down a little bit, up sideways. Talk about that from a technical perspective in a little bit, but we ended the week right at about $285 per share. Microsoft is said to be, this is like a head scratcher. Microsoft is said to be in talks to invest in India's Oyo, I'm not sure if that's how you pronounce that, at a $9 billion valuation, but here's a picture right here. It's a metropolitan hotel. So I thought this was interesting. Now, look, they're not buying the whole company for $9 billion, I don't think. They're just investing in them at a $9 billion valuation. Could be $100 million, could be $200 million, could be even $1 billion to Microsoft is, like probably $10 to $100 for most of us watching. So it wouldn't be that big of a deal. But most people are scratching their head on this one, that Microsoft is investing in an Indian hotel chain. Not exactly sure what the synergies are there, but maybe they got a lot of workers over there and it's just a way to maybe get a discount on housing them. I don't know. Microsoft buys artificial intelligence solution Supplery. I'm sorry, I've got a lot of tough pronunciations on today's show, and I'm from California and we're not experts on those types of things. But here's the deal. So they acquired this Seattle startup which uses AI to analyze corporate spending. The broader thing, look, this is probably a minor acquisition, you'll barely see, but every week we're talking about 1 to 2 of these deals with Microsoft. They have stepped up the acquisition game big time, and they're doing a lot of small ones. Look, last year Microsoft was trying to buy TikTok. That doesn't look like it's going to work out for anybody, but it definitely didn't work out for Microsoft. Earlier this year, they were in talks to buy Discord for $10 billion. Now I think they bought Nuance Communications. That deal still has to work its way out. But I think what all of these corporates are deciding is, look, we could do the big $20 billion Nuance deal, or if you look at like an NVIDIA or an AMD where they bought Xilinx and those types of things. Well, look, it's going to cost a lot of capital from a legal perspective, from maybe even a political perspective as well. Those deals are going to be tough to close. So Microsoft, I think, is going the route, let's do a bunch of little deals. And they're doing deals like every week. Like this is every week we're talking about this. I think that's a very good strategy, especially when it's Microsoft. They have just a huge vertical of products and customers and use cases. I think it works really well for them. A little bit tougher for like a Google or a Facebook since they're really in one vertical. Same with a Netflix, really in one vertical. Okay. And obviously a Tesla too, you can kind of box them in there as well. But Microsoft is perfect for this environment where the United States government and really governments across the world, I don't want to blame it just on one, they're not in the mood to allow Microsoft to buy up a bunch of their competitors at even larger than average price tags. But they can get away with a lot of these small deals. And so Microsoft is well positioned, not only from a capital perspective. When we did their video, they have like over $100 billion worth of cash. They have tons of cash to do these deals. So I'm actually really excited about Microsoft. I think Microsoft and Amazon are the two companies that are well positioned to do a lot of micro buys of other little companies and fly under the radar of regulators. Whereas Facebook, Google, those types of companies, little bit different because their businesses are so linear. They don't really have that kind of vertical integration into other stuff like we see with a Microsoft and an Amazon. Microsoft stock reverses course. So when we did the Microsoft video, it actually was trending down and then reversed course. What Microsoft does is they save their guidance for the call, and maybe in future videos I wait till after the call, but it doesn't really matter too much. Usually it doesn't sway it too hard or another. But to add all the segments up, all their cloud, their productivity, their Windows business, that type of things, overall revenue is going to come in between 43.3 billion and 44.2 billion. The consensus was at the low end, actually below the low end, at 42.2 billion. So they came in even at the low end about $1 billion higher than that. And on the higher end, they're looking at $2 billion over consensus. My guess, you'll come in right around $45 billion over at Microsoft in the next quarter. Okay, they're going to put high-end guidance here, and they're going to look to exceed this. That's probably internally the company goal is very close to $45 billion worth of revenue. We'll see if they're able to target that. Last of the news, we got Tesla started the week at $651, melted up nicely. They reported earnings on Monday. The markets had the longest time to kind of digest these. Initially, the stock traded off, but as things got digested, we'll talk about the Chinese automakers as well here in a second, things started melting up. Now Tesla, this was earlier in the week, and Tesla and the other EV stocks actually fell as China regulatory crackdown concerns grow. This was a big week for that, man. We've seen China, do things. Obviously, their government and the way things are structured in China are a lot different here in the United States. So I'm still kind of taking a wait and see approach with Alibaba and some of these other stocks, JD.com, and certainly in the EV sector, you've got NIO, you got Li Auto, you got a handful of other ones. They got hammered this week. Like NIO was down at 7.5% in one day. Li Auto, a similar amount. They have rebounded a little bit, but I'm still, in my opinion, kind of taking a wait and see. It's something I'm going to do this weekend and look into this, but Tesla was kind of wrapped up in that as well. Now, Elon Musk confirms that Tesla AI Day will be on August 19th. Remember Battery Day? I think everybody was pumping that. It could be, okay, August 19th, that is 2 weeks away, 3 weeks away, really, from today's date, a little less than 3 weeks. So we'll see what happens if this has any movement ability. But what I talked about, Tesla earnings are so well telegraphed now because they announced the number of cars for sale. People are really, really analyzing this company, much like they do Apple and really all these FAANG stocks, that the earnings aren't necessarily a big surprise. Unlike Facebook and Google, they can kind of surprise people, I think, to a certain degree, and maybe even Amazon too, since we saw the stock have a really bad reaction to their earnings. But Tesla a little bit harder. So it takes these special days, AI Day, where maybe you get a little nugget out of Elon, maybe a little bit of a surprise. Now, EV jolts. Tesla forecast to bring in more EBITDA, that is earnings before interest, taxes, depreciation, and amortization. My high school, or excuse me, my college finance days did pay off. They're expected to bring in more EBITDA than GM and Ford combined. This is according to an analyst who thinks their EBITDA tally, or EBITDA, however you want to pronounce it, coming in at $38 billion by full year 25. So that's what, 4 years away, a little more than 4.5 years away for the full year of 25 to finish. If they come in with $38 billion worth of EBITDA, that is more than Ford and GM combined. Obviously, if you've owned Tesla shares for a while, they've got a $640 billion market cap and a PE of just 126. If you want to go look at the PEs of Ford and GM, they're not even anyway. You probably take off several zeros here, several digits here. They're minuscule PEs on those companies. But if Tesla is able to continue to grow into that evaluation, guess what? Maybe the stock price is cheap right now. Morgan Stanley has a bull case price of $1,272 on Tesla, which is nearly double where the stock is right now. Obviously, bulls agree with that. Now, Tesla gains after calming some investors' anxiety over Bitcoin and tax credits. Tax credits in the quarter came in a little bit light. That's the one thing as investors and analysts we don't have a lot of visibility into. We can't see how the regulatory credits are selling, and that is the bulk of Tesla's, not their revenue, but really their profit as a company. But they kind of said, hey, that's not that big of a deal. And here's what I saw that came out of this. is that once this Austin, Texas plant, which I think is set to make Model Ys and eventually the Cybertruck, and the Berlin expansion, I'm not exactly what cars Berlin's going to make. I'm assuming it's probably 3 and Y. But automotive gross margins could come in at 30% plus, 30% plus. Now we're starting to look in like quote unquote iPhone like margins, okay, in terms of manufacturing. That is one reason why when you look at consumer electronic companies, why Apple, why it doesn't trade at like a crazy premium, it definitely trades at a crazy premium oftentimes versus other consumer electronic brands. Well, Tesla trades at a crazy premium to other automobile stocks because look, if they can hit 30% gross margins, I think right now they're in like the mid to low 20s in terms of gross margins. So if you can come in over 30, hello, this stock is, I don't want to say it, but maybe definitely overvalued. So let's log into our TradeStation account. Man, what happened? We got logged out. But we are going to log right back in and we're going to take a look at the chart of Facebook. Now, you might be wondering, Facebook did come back, okay, earlier in the week before Facebook reported earnings. It was at $377 per share. It has fallen back to about $356 per share. Is the uptrend broken? Not really. I don't think so. You know, everybody can draw these lines in differently, okay? You can shift them up, you can shift them down, but in general, yes, we are right on this trend line, but we have been on this upward trend. We have come back. It is very natural on an upward channel to come back and retest that. And so we retested it here. You could drop this line below it. Maybe we pierce through it. I don't know. It's never that big of a concern if you re-pierce this because take a look. We did it right here, okay? Notice the stock got up here and it came back down here to about 335, but the previous lows were at 330. So as long as you don't break through the previous lows, where now in this case, we're looking at right at 335. Okay, so if Facebook were to come all the way down here to about $340 per share, the uptrend is still intact. So even next week, you got negative numbers on Facebook, the uptrend would still be intact. It's when and if you break this 335 level. You break 335, then the uptrend is likely broken, at least in the shorter term, and we could come back and retest zones down in here. The other thing to keep in mind is stocks don't, I know if you've owned Google, it's hard to believe, but stocks don't go up forever. Eventually, we'll wave out sideways, much like we did for almost a whole year with this stock. I don't necessarily anticipate us waving out sideways for a year on these FAANG stocks again, but we might wave out sideways for 2 or 3 months and then resume sometime an uptrend or maybe even reverse all the way course and come back down. I don't know. But we'll wait and cross that bridge when we get to it. Moving on to Apple. Really an interesting setup here. Okay, we broke above these highs, which were back here at 145. We kind of broke up all the way about 150, hit it twice. We're just sitting right here at 145. Little bit of indecision with Apple, but the uptrend is not broken. Are we a little bit below it? Depending on how you draw this trend line in here, you can draw it in a number of different ways. We're sitting right on top of it. I wouldn't say a critical week for Apple next week, but you wouldn't like to see Apple get below about 142. So it's literally sitting on the edge of a cliff. And if it falls off, you could have a buying opportunity down here at 137 with this one. That would be an interesting spot. That was resistance for the longest time. My guess is this will act as some level of support. You break through 137. We're back in the middle of the zone. And that could create buying opportunities. Speaking of back in the middle of the zone, that's where we're at with Amazon. This thing was trading sideways between about we'll call that $2,900 per share up to about $3,500 per share. About a $600 range on this stock. It was doing that for basically a year. Then we did break to the upside. Okay, pre-earnings, we broke all the way up to 3,778, which are basically all-time highs. We broke above what I view as a critical level here at 3,500, but then earnings came and boom, we crashed all the way back down. I actually put a red line right in the middle of these zones. That's basically where we're at. So from a technical perspective, this is a broken uptrend, right? Because we have low here, higher low, higher low, higher low, but then we broke down below actually 1, 2, 3 of the lows. So that's absolutely broken trend. Me personally, I'm monitoring Amazon. If you're, very big fan of the show and you watch my videos very carefully, number one, I appreciate it. Number two, you know I'm overweight Amazon in my IRA account, but I would like to buy the dip in my son's account. Okay, my son's obviously much younger than me and have much less money and exposure into Amazon. A pullback down into this zone, 3,200, might trigger a buy for me. A pullback between 2,800 and 3,000 into the lower end of this zone, that might trigger me going one more share in my IRA account, which is very difficult to do. They don't have fractional shares on my E-Trade account, which is somewhat sucky, but I might have to do a full share of Amazon if we pull down to the bottom of the zone. I'll be sure to keep you abreast if I decide to do that. Moving on to Netflix. Now this one, finally my lines popped up here. This one's hanging out in the middle of a zone, okay? Kind of like Netflix, although we didn't gap down. We came up to the top of a zone. We hadn't pierced through it like Amazon, but we came back through, and now we're just kind of hanging out here in the middle of the zone, okay? So a couple things can happen. We can find our footing here, resume an uptrend higher. You still actually have some semblance of an uptrend here, okay? You have something like this going on now with Netflix. You have a low, higher low. Maybe this was just kind of euphoria blow off. We come back here, we find footing, and we resume this trend. You could probably draw a similar trend line onto Amazon. We'll find out in the coming, probably this next week. Okay, you break this 510 level, 515 level with Netflix. Well, you're coming probably back down here to 480, 490, and that is proven just over the last year. From a trading perspective, I wouldn't be just me personally talking. Okay, everybody has their own investments, their own investing goals. I wouldn't be super excited about owning a stock like Netflix. I just don't. They're not as broad. They're not in the exciting verticals that I like to be in. And you have competitors in the space like Disney and certainly like a Viacom, NBC, those types of things that are well capitalized and very worthy competitors as well. It's not like Facebook and Google, which are just dominant. Apple's dominant. Amazon's dominant. Netflix is dominant, but they've got some competitors out there. So long story short, I'd like to buy it down here. I would buy it as a trade. Okay, you buy it down here, 480, 490. You set a stop loss maybe at 470 or so, and you try to ride this thing up to 540, 550, 560 or something. You make $100, $100, 75 to $100 per share, and move on throughout your day. Moving on to Google. This isn't going to take long. Stock's in an uptrend. This uptrend is intact until it is not. This is unbelievable. Okay, this is as clean as an uptrend as you'll see in the mega cap, really across all of the stock market, but especially in the mega cap space. I don't know of an uptrend that's as clean, as locked in as this. You can pretty much buy Google on any dip to the bottom of the trend. I like pointed with my finger like you guys can see it, but with my cursor here, any dip right here is a buy. You can set a stop loss below the previous low if you want to be careful. You break below this, and then it's on watch time, okay? You break this trend, because this trend hasn't been broken in a while. And so if you break trend for whatever reason, maybe some regulatory stuff, I don't know, but for some broader market stuff, you break trend on this one, who only knows where this one goes. So it would be kind of exciting to kind of see what happens there. Moving on to Microsoft, also locked up in an uptrend. This line is no longer needed because we have steepened this uptrend here with Microsoft. It pulled back a little bit, but we are up here, and this uptrend is intact until it's not. And look, maybe I could leave this in. It could be that we pull back, okay? Microsoft pulls back, broad market pulls back, I don't know, for whatever reason. I would not be concerned, especially if we're talking about over the next 2 weeks. Microsoft pulls back to 260, even 270. That's like $20, $15 lower than where the stock is right now. Wouldn't be concerned at all. That uptrend would still be intact. We're just kind of looping around it. We'll see what happens with Microsoft. Last thing is Tesla, and Tesla's probably the most interesting from a technical perspective. Okay, because we are wedging out here, okay, and we are at what I would call I can probably remove that line because I think it's kind of obvious. We have a downtrend, like longer intermediate turn. We have a high, lower highs, okay? But we're seeing here in the shorter term, you have a low, higher low, higher lows, higher lows. And so now we've like kind of meet the tip of a wedge. And what happens is when stocks meet the tip of the edge, either buyers or sellers take over, okay? Or one of them dries up, depending on how you want to look at it. But we're either going to break higher up into 750 in my opinion. And if you break into 750, maybe the momentum of battery day, those types of things, 800, 850, 900 on this one, or you're going to break down from here and you're probably going to retest this area at 550 again. Okay. If you come back, this is actually a really good spot. Okay. Especially from a trading perspective, from a buy and hold perspective. I'll let you decide, but from a trading perspective, I actually love this spot, okay? Because you're either going to drop to 550, okay, and create a nice little buying opportunity there, and if you think it's going to go there, you option strategy, sell this short, whatever you want to do to write it down to 550. The other option, which I think looks promising at the right now, is that we break above 700. And I'd probably wait for a break above 700 because that's the highs right here. I'll draw this in actually because I think this is a critical spot. So here's 700. This is where Tesla has hit its head over the last few weeks or so. It has not gotten through 700. Now, if for some reason next week, Tesla, not necessarily just one candle, I'd probably look for 2 candles above 700. But typically when you break trend, especially with a well-followed stock, it can move very quickly. Anything over 700 and 750 is, I don't want to say guaranteed because I hate saying stuff like that, especially when it comes to investments, but a high probability. You get above 700 on Tesla, 750 has a very high probability, and that's a good trade. Look, 7 to 750, that's a pretty good move. And I think it would happen within a week or two, okay? You get above 700, this thing's going to rally, okay? And if the momentum stays, I'd probably set some kind of trailing stop here in the 750 range. I'd set a trailing stop because this thing could just keep moving. 800, 850, re-attack these highs of $900. Tesla is set up absolutely beautifully. I am going to be keeping a very close eye on that on Monday. Now, from a buy and hold perspective, we're looking for it to actually break down here and buy it at a lower price. But if you're a buy and hold investor and you like momentum at the same time, which if you look at the Google chart, there's no reason why you wouldn't like momentum. Well, and even the Microsoft chart as well. Well, buy it up here and let's play the rally up into 750, 850, 900, which I think looks very much like it's around the corner with that stock. That was the FAANG Stock Recap Show. Have a great weekend. Thanks for everybody for tuning in this week. We'll be back with more videos. Good luck with your investments.